Hi, this is Mina Rickey,
And this is Lydia Korjak.
and today we're interviewing Daniel. And Daniel is the co founder of Roots, a real estate investment company with a business model that creates wealth for its investors and property residents simultaneously.
How it works. One, you invest in the root funds to build the wealth.
Number two, Roots buys and manages properties and rents them to amazing residents.
Number three, Roots residents are given the opportunity to earn quarterly rebates to invest in funds if they pay rent on time and take good care of the property and are good neighbors. As an investor, this guarantees you a steady ROI and that your property is well taken care of.
Their approach empowers Atlanta's renters community to invest in the homes they occupy, helping them save money rather than drain them of their hard earned cash.
It also provides that the landlord and the tenant relationship does not have to be one sided.
Roots has 25 properties spread across Atlanta. By renting one of their homes, a renter can, on average, save $1,877 in their first year and accumulate over $6,912 in wealth if they stay for 5 years.
The American renter barely has enough to survive, much less save, and the majority have less than $1,000 in savings.
Daniel has 5+ years of real estate experience and assisted Roots in raising 8.4 million.
Previously, he worked as a national distribution manager at Co-Video Systems, where he contributed to development of the video marketing campaigns that helped many businesses grow and build their brands.
And welcome to the show, Daniel.
Yes, welcome, Daniel.
Hi, how's it going? Thanks for having me.
That's great. Tell us who you are and what you do, and what's that special little niche that you have going.
Yeah, absolutely. So my name is Daniel Dorfman. I am born and raised and still live in Atlanta, Georgia. And we have started the first residential portfolio that helps our residents and our investors create wealth at the same time. And our fund is designed to kind of alter the landlord tenant relationship
Mm-hmm.
and make it more of a partnership. And by doing so, we've created less vacancy, lower turnover costs. A lot of people, some people don't care about this, but we do, which is we give our residents an opportunity to actually build wealth while they rent with us. And I know you guys are in the space, so you know how hard it is to actually go from renting to owning a home. So
Oh, yeah.
I guess that would be our little niche.
Ooh, so many questions about that. But I really just want to get a little bit more of the origin. How did you get into this space? How did it all come together?
Yeah, totally. All right. So in 2009, when I had my first job out of college, my wife and I were kind of sitting around, and her parents were in the construction industry and kind of helped us get into our first flip. In 2009, we bought the property and started to do work on it and overshooting the budget and not being able to sell it. So we rented it. But what that did was kind of got our minds thinking about the passive income and the ability to understand that the real estate asset's really unique and that you can refi and potentially obviously like sell the asset without having to give it up. So that really got us thinking and us in the track of, hey, we want to be landlords, I guess, and in this space. And over the next, I guess, until 2017, I worked in a separate industry, wholesaling software. Anytime we would have a big deal, we would go and try and buy a property. So our goal was to buy a property at least one a year.
Okay.
And we were able to achieve that plus more to build up our small personal portfolio. And in 2017, we decided to make a career out of real estate on another level, which was to start our residential team, helping people buy and sell homes. And at that point, we started our team. That team now has 11 agents on it. We sell about around 140 to 150 units a year here in the metro Atlanta area.
Wow.
And when COVID came around, like everyone else, we kind of had a lot of time on our hands and really thought about what we wanted to do. And not that we aren't extremely happy helping everybody, buy and sell homes, but just kind of, what could be the other layer and how could we kind of make an impact in this community? Because when you're doing this all the time, you're realizing it, right? Like I said earlier, like the gap from renting to owning
Mm-hmm.
is becoming larger and larger. And the gap from owning your first home to going and buying your first investment home by yourself is even wider, right? The capital requirements for that and the loan requirements for that are very challenging. And so what ends up happening is, only about 10% of America
Mm-hmm.
can really be in that space. And so we saw a huge opening, if you will, for a product like ours, like the REIT that we've created, where anybody can start growing wealth in real estate for $100. And again, including our residents. So
Okay.
that's kind of how it all blossomed and started.
So you guys started doing your personal portfolios since 2009. You started with your own, then 2012, you started kind of growing. 2017, you outgrew yourselves a different model, and then COVID, and then you just went into a fund to actually allow people more flow of money in and more flow of product. That's
That's
impressive.
something totally different. That's what out there to make your residents not only quote unquote tenants, but also owners. So you're tenant, but slash your owner of it, percentage of it. And you mentioned it's $500 only?
100.
Yeah. So you can start with us for $100, investwithroots.com and kind of get started on their journey. Our platform's similar to like an Acorns in that you can
Mm-hmm.
invest, initial deposit and set a recurring payment if you wanted to. It's a pretty flexible platform that we've built. And yeah, so for our residents, what happens is when they move in from day one, we don't take security deposits.
Okay.
We've put that, what would be their deposit, as an investment into the fund.
Into
And
the
so
fund.
they, in return, own a percentage of all the homes that we own. And, it's amazing to see what happens when you have owners living in your property versus tenants.
Correct.
Well, and this is good too, though, Lydia, because the market has been, I mean, there is
Mhm.
just not enough product because of what it was very attractive to many investors, right? There was only this many houses and there was so much money printed through COVID. So they had to put it somewhere. So they will put it in real estate. So the real people, the real families that wanted to buy didn't good enough. They were pushed out of the market.
Correct.
And now you guys are saying yes, and we are going to allow you to still play with all these big dudes with a little bit of money just by being our customer, our tenant per se. That's very interesting. I just wanted to make sure I
That is,
understood.
yeah, that is a very unique product.
Correct.
Nothing out there. I've been in real estate 22 years, right? So I'm aware of the products that's out there. Nothing is out there. So this is amazing. Now, the people that invest in your REIT, in your fund, they become the owner. Do they have access to cost segregation, depreciation, appreciation in value? Is there is anything that you offer to them as well?
Yeah, that's a great point. So fundamentally, when you invest in our REIT, there's kind of three avenues in which we like to point out, which is one is the distributions of profits. So everybody's included in the distributions quarterly, and those are based off of the entire profits at the fund, which could be rents
Mhm.
and it could be loans that we are able to, to establish to other
Okay.
partners. And then the other piece is appreciation. Our fund is set up without a waterfall. There's no carry cost, there's no
Okay.
entry fee, and there's no exit fees after the first year of holding the units. And then the other piece is liquidity. We offer liquidity to all of our investors quarterly. So up to 5% of the entire fund can be cashed out quarterly. So you're not stuck in it like
Mhm.
most real estate assets.
Yeah.
And the reason we do that is we do see ourselves as a nice stepping stone into
Yeah.
your own ownership one day or into different avenues of wealth creation. And so we want you to be able to ride the wave with us, understanding that you're going to, so last year we're up 16% last year and 32% since inception of July of 21. And in terms of the cost segregation, and I love those questions, we manage the fund in the most professional way we can to take advantage of all of those aspects,
Okay.
which in return get passed down to all of our investors. And that's a big thing that you point out right there is the real estate asset is amazing if
Mhm.
you know how to use the tools to your advantage, right? What happens so many times and what you see time and time again is, oh, I went and bought my first investment property and it was a nightmare. The cash flows were all off, maintenance, all the things that happen,
Mhm.
but they don't understand all the tools such as cost segregation, such as the refinancing the asset at every 15 years or so, recapping it. And when you don't know those tools and you just look at it as, oh my goodness, I'm losing 300, $500 a month, you end up getting frustrating selling one of the best
Yes.
asset classes out there. And so we try to utilize all those techniques and then pass it down to our investors.
That is great. Now, as Lydia and I get more into the raising capital, we are learning about funds and the legal ways to do it. And there, it's very intricate. How did you learn about it? Who helped you? Who coached you? How long did it take you? Anything you can tell us about that particular interesting fund?
Absolutely. So I over since 2017, I've been involved in a lot and led a lot of syndicates into the small multifamily space in Atlanta. And by doing that, and you create your LLC, you do all these different, like, what I would say kind of the simple structures where I kind of learned that, if you want to make a bigger impact and you want to have the size of investments that we wanted to have, and we don't target large investors, we're targeting, you know, we want to have 1 million people on this platform in the next 5 years. And so the idea is they're very small investments incrementally over time with a bunch of people. And so for us, we contracted early with a attorney at Baker Donaldson who cost us a fortune, but that's what you have to do. And, we just said what we want to do. And they were able to really outline like, hey, if you want to do this the right way, you have to get you have to be a Regulation A fund, and it's a lot. It's a lot of work. We just got done with our year-end audit, and now we have to do our auditing file with the SEC. And so, from a coaching standpoint, really, we've leaned on our accounting team, who is also the one who did. I don't know if you're familiar with Jamestown out of Atlanta, but we've worked with the same accounting group that does their Reg A fund. And yeah, it wasn't a lot of learning lessons and a lot of time. It was probably a year's worth of work to get this done. So
Oh yeah. Oh yeah. It's a definitely long process. So my other question to you is we know that the resident can invest. So all of our listeners are professionals. They're doctors, attorneys, busy life, have family, have kids, have pets, few pets, and they have extra income that's sitting either in their 401k or maybe in their savings account and wants to invest in such a product that you have. Can they do that?
yeah, absolutely. So the residents that we have on the platform since 2021, we've bought 48 homes in the fund, and we're going to look to add probably another 30 this year. And so, a majority of our investors are not residents. A majority of our investors are people who have been enthralled with the idea of, hey, I love real estate. I don't want to manage it myself. And I
Mhm.
also love the idea of making an impact on the people who live in these buildings because most people have been renters at some point of
Mhm.
their lives. And most people did not make any money when they rented. So
Mhm.
it's a
That's true.
relatable story.
It's also kind of expanding the knowledge base in the
Mhm.
population about the possibilities of investing in real estate. We tend to think, because it used to be this way, we tend to think that it's for very few lucky people that had a father that taught them or an uncle that taught them or a special friend that told them. Today, in the era of information, we can learn through all kinds of platforms and it's available. And now this is the tricky part, to make it legal, which is all the time that you have to spend and all that money you have to spend so you can understand all the regulations, what's going on. Because it's easy to say, "Hey, everybody, give me $100 over here, and we're gonna buy houses." Yeah, that is illegal, and you can be put to jail by it. So I do applaud your efforts, and it's been so. So you said 48 houses plus 30 this year. What is, and then you also mentioned another goal, 1 million people in 5 years. So how are you planning to grow, and what markets, and how can people reach out to you to find house to sell you houses, or how, tell us more about that.
Yeah, absolutely. So our main market and primary market for this fund will probably always be Atlanta. We're very familiar with it. We have, if I say we do something better than most, it's finding properties under market value. We've got an extensive network here. We've been doing it for 13 years in the city, and we just know this market really well.
Mhm.
And it just, we got lucky that it's the number one market in the States right now. But that was, we kind of fell into that. And so we don't see ourselves leaving Atlanta for at least 3 years while we build this out. But that doesn't mean that our investors can't be from all around the states, right? So we have a lot of investors from California right now coming to Atlanta and investing in Atlanta, and we're excited to have everybody being part of that growth.
Daniel, how old are you?
35.
And maybe that's, see, it's the newer generations, the ones that are
Millenniums,
thinking on how.
millennials, man, I'm telling you, these
Yeah,
millenniums, they're
they
making
are thinking.
changes in the whole, ripple of the world
I
affecting.
Okay, I'm getting a little bit philosophical here, but I wonder. Okay, so if you're 35, I wonder if the 20 years old, the guys that are 20 years old now, are going to even take it a step further and just make it into like everybody big pools and things like that. And I wonder where things are going. But hey,
It's interesting, you have, it's there where there's a need, things pop up, right?
yep.
And there's a obvious disconnect or an obvious need when it comes to housing at this point. And there's an obvious need into where you have to start these new models and new ways of ownership, because there's so many people right now between the ages of 26 to 35 that home ownership is not in the question and not in the cards because of the way that rates have hiked at this point. Now rates are high and now their buying
Mhm.
power is gone. Whereas the last 2 years rates were low and it was too competitive. And so I think you will continue to see these kind of innovative models and these
Mhm.
ways to get into this asset class, because I mean, let's face it, everybody's been pitched on the like white picket fence American dream of home ownership, and it's kind of been put out of reach for people. So the
Yeah.
idea of millennials coming in and trying to shift that to
Mhm.
make it possible with through technology is, I think, a big driver of what's going to happen. And yeah, I'm excited to see what even people 25-year-olds are creating, because I'm sure it's way more advanced than what we've got over here. So
Oh, you have kids that you're putting also into real estate. I did a little bit of research on your fund and what you do, and you're doing this for your kids. So I'm sure that your kids gonna come up with even more awesome product.
that's right. Yeah. My 6-year-old and my 3-year-old have ownership in real estate through our fund.
That's
So
amazing. That's amazing.
it's pretty cool. And we did a big campaign on kind of gifting your
Mhm.
loved ones land over the
Mhm.
holidays. And it's really unique when you go to like your holiday party and your 10-year-old nephew showing you the portfolio.
That's
So
amazing. That's awesome. So besides single families, do you in your REIT, do you own other assets, multifamily, industrial? What else do you have?
yeah, so that's a great question. So when we started this in 2021, the multifamily space was so overpriced because of the hedge funds getting money at less than 2% in some
Yeah.
cases,
Yeah.
that it was not a target for us because we just couldn't find a asset in Atlanta or around us that
Mhm.
met our criteria from a return standpoint. So thus far, we've stayed in that single family under 5 unit space. Most of our places are duplexes or triplexes. We own 1 8 unit, but for the majority of our homes, we've stayed in that asset class because we were able to find places that made sense from a return standpoint. So that's kind of our biggest thing is obviously return to our investors, and the multifamily space. Maybe it's changing now. That could be
Coming.
on the horizon, but it still feels pretty competitive out there. So
Mina, I had an interesting experience the other day. I was showing properties to a family with 2 kids, and we had 10 to see. After viewing about half, the family was getting pretty hungry and they really just wanted to continue the other day.
So what did you do?
I went to my car and pulled out a bag of delicious Rickey Jerky. They loved it so much that we're able to continue our day without any issues. All the ingredients are 100% natural, plus every strip is seasoned, marinated, and smoked by hand to give you the best experience and slap you back into the gear. But I need to buy some more.
Oh, just head over to rickysjerky.com and use the discount code Decode REI for 15% off your first order.
So whether you're a busy real estate agent or just looking for mouth-watering snack on the go, Rickey Jerky got you covered. Oh, it's coming, Daniel. Hold on. Hold a second. This is what I gotta say. We're hitting a different market cycle here, you guys. So
yeah.
brace yourself.
As we're recording this at the end of April, we believe that by August or September of this year is when we really are going to see some of the loans coming due, or the sophisticated balloon or IO loans coming due. And some of the operators are not truly operators. They were just looking for a place to park their money.
Yep.
And unless they wake up and they think, oh my gosh, I haven't added any value to these properties, and I want this much more money than I pay for, even though the market is pulling back a little bit and I'm not able to raise rents as much anymore because of inflation and the cost of living is higher. Anyways, all of these things are playing a part, and we believe that there is going to be a lot of product coming towards the end of this year. We'll see, Daniel. But keep your eyes open, yeah, for that.
yeah, that's kind of what we're in the same boat, especially in that multifamily space.
Yep.
I think gone are the days obviously of 2% money anyway. And now gone are the days of, guaranteed 8% rent increases every year. So those performers are going to look interesting at the end of the year.
Totally agree with you. Little bit switching subject from a fund. So, in any business, especially if you own multifamily, single family, any real estate investment that you own, the biggest thing is your team. Your team can make you or a team can break you. Can you talk about who's in your team?
Yeah, absolutely. So I actually had the pleasure of starting this business with one of my best friends and
Mm.
with my father. So those are the three co-founders. They both have extensive experience in business operations, and I had the real estate. So it was nice to bring the three of us together. And since then, we've been able to bring 7 other team members on board, an amazing accounting team, because that's our cap table, as you can imagine. Taking on smaller investors at a high frequency is pretty complex. And so thus far, we've had great success with hiring. And I think the biggest thing we do is look for culture fits
Okay,
before experience fits. And it's been great so far.
that's awesome. Now, do you manage your own properties or do you hire a third servicer that does that for you?
So when we started, this was one of the learning lessons for us
Of course.
is, we started off with the concept of being from property management and in that space already. I was like, look, we don't want to do that. We don't want to be the property managers. But the problem was the company that we were utilizing to do it just really didn't understand how we wanted the resident treated, because it's such a big aspect of what we do. It became challenging with them. And so we ended up taking it in house. We do manage our own properties in house right now. Whether we do that in the future, once we have enough doors to maybe potentially get some, a little bit of a more special catered relationship, we might look to offboard that at some point. But right now, we're managing them in house. We've got a team of resident experience managers who do it, and it's been great. So
I wonder if you could incentivize your tenants with stock to maintain the property. Sparkling.
So yeah, so that's awesome. I love that segue. So part of our program is we have with our residents, it's called Live in It Like You Own It.
Okay.
And each quarter, if you've lived in it like you own it and met that criteria, so the criteria is pay rent on time,
Mm-hmm.
be a good neighbor. So basically, we have a lot of duplexes and stuff, no like noise complaints, those types of
Mm-hmm.
things.
Mm-hmm.
And then the third thing we ask them to do is to take a video of the inside and outside of their unit to point out any deferred maintenance or preventative maintenance items that we can do. As you guys know, usually what happens in this asset class is you move somebody in and then you don't see it again for 2 to 3 years. And by the time you get back to there, it's a whole another place. And it's, I think industry average is over $3,500 to turn a unit once a tenant moves out. And so by doing the video, we get eyes on the asset early. We see problems that are $100 fixes now that would be mold later. We fix a lot of different things like that. And it really saves everybody time and money going forward. And so if they do that, if they live in it like they own it and meet those three criteria markers, we actually give them a rental rebate each quarter that goes into the fund underneath their name. And, a lot of folks see it as like, oh, that's cool to like do that for the resident. And it is like, we love helping our residents, but it's more than that. It's a partnership that's being, curated between us and them. And they're doing their side of it, right? They're the ones who pay our bills. They're the ones who take care of these properties for us. And so we want to pay it back to them a little bit when they do. And what we're seeing is kind of crazy. Our turns right now are under $1,000 on average. Our vacancy is very, very low. We've actually not had anybody move out of one of our properties who stayed in Atlanta. They all have had to move out of state for a job or something like that when moving out. And it's just a unique opportunity, especially as we move into a little bit of a different rent cycle and a different atmosphere. It's incredible to have this opportunity to build wealth while you rent. And we believe that will set us up for success when it's not, just as easy as hanging a sign out front to rent your place.
It's a big deal. So for the public to understand, the most expensive thing about renting properties is that turnover, because
Yep.
you are not making money during the time that you're rehabbing the unit. And not only that, you're also spending money.
Mm-hmm.
So if you can keep your residents longer times, that means, it's just more money for the investors and for the owners and all of that. So that's a big deal. And I was just going to point out that in today's day and age, we are so accustomed to take videos and pictures and selfies and share them. So it's not even a weird thing. Like 20 years ago,
Mm-hmm.
that would have been impossible to do. But in today's age, it's like totally normal. And then here you go. And that is brilliant. I love it, Daniel.
Yeah, that's amazing.
Yeah.
I have one more question for you. So our listeners are busy professionals. They probably have their 401k or savings account. What is one advice that you can give to someone who never invested in any real estate or fund, but have that money sitting either in their savings account or retirement account? What would you tell them?
Yeah. So if I were to tell you anything, I would say from a fund level, find a manager that you can trust,
Mhm.
find a fee structure that works and makes sense for you. And if you're going into something, just understand that it's for a long term hold and don't think about it as your short term play. That would probably be my number one thing. And yeah, pay attention to those fees out there. I know I early on invested in some things that I thought would be wonderful and were wonderful, except for the back half of the growth was actually split between me and another person. So it wasn't as great a growth opportunity as possible. So
Well, talk about that a little bit. What is an ideal fee, and what is a common fee? What is a high fee? Seriously, because I don't think we talk about that much in real life.
yeah. So, obviously, as a fund manager, I get the idea of making like you have to make money. You're putting it together as a GP, and that's fantastic. I think if there kind of are a couple things you can dip into, right? Which is like the back end structure of like a waterfall fee, that's totally fine. There's usually there might be like an assets under management fee. I think if you can pick a fund manager who has picked one or two of them and not all of them to dip their toe into, that would be my recommendation. I think assets under management is one that I kind of chuckle at a little bit, because I've already given you you're not managing it, right? You're essentially, you just put it in the fund. It's not being managed necessarily, right? You're not a broker selling my stock and then going into other positions. So that one is one that I would probably try to avoid. The waterfall structure, I'm actually okay with in a lot of ways, right? Like a lot of times the LP's getting the benefit of the upfront, and the GP's taking it on the back, and that's perfectly normal. And I think that's a structure I'm good with, but I would be wary of the ones that have a toe dipped in every bucket along the way.
I love that. Yeah.
How about, you mentioned time wise? So from short to long, what's the expectation on time wise?
Yeah. So I think if you like in general go into a real estate, if you're looking for your own purchase, don't purchase anything with less than a 5-year horizon in your belt. I think it's pretty famous saying, like, you don't lose money unless you sell real estate, right? And so I think the idea of purchasing real estate with any kind of, unless it's a flip, with any kind of short timeline isn't the best strategy. And that kind of fits in line with a lot of the funds, right, that are tied to one asset. It's usually going to take a year or so to get it even optimized, then your rents, and then at some point you'll sell it or refi or figure out a way to get your capital out of there. But I think looking at every real estate investment, in my opinion, as a 5-year plus deal, and you're going to be pretty successful. When you get caught in that 1 to 2 year period, that you might get in trouble. So.
That's right.
That's true.
Real estate always goes up. You just have to live long enough.
Right. Exactly.
Well, Daniel, tell us again, where can our listeners find you, and where are you in social media?
Yeah. Awesome. Yes, please look us up. We are investwithroots.com, and our social handles are at investwithroots on everything from TikTok to Instagram. So would love to answer any questions, or if anybody has thoughts or different ideas. We're a big community, so we like to hear and innovate. So
great.
Thank you guys for having me, by the way. This was awesome.
Yeah, of course. But what's the best way to contact you? Which platform you would respond? Emails?
Instantly. We will respond instantly via Instagram or via email. D Dorfman at investwithroots.com is my personal email.
That's great. Thank you so much, Daniel. You have such a niche, unique product. I can't even explain to you. Trust me, people, I've seen not everything when it comes to real estate, but this is very, very unique product that Daniel created that works together with everybody. So thank you.
Thank you.